I am bullish. And the reason why, well, there's a number of reasons, but the big one is that this business of the so-called weaponization of the dollar and the central banks around the world piling into gold, and that's not done. There's just a survey out today. I saw the headline today, and it wasn't just World Gold Council, it was somebody else surveying monetary authorities around the world. And something like 40% of them say they're going to be accumulating more gold, or they expect to be accumulating more gold going forward. So this is a really, really big deal. And I think of it as a paradigm shift. This is a one-way change. Nobody's going back, certainly not BRICS countries, are going back to saying, you know what, it's perfectly fine to have our economic life's blood controlled by Washington and New York. It's just not going to happen. So, at the same time, you've got Basel III, which includes gold as a tier one asset. So you can put it on your books, which changes the incentive structure for your average central banker out there. It just seems to me the writing is on the wall. Now, let me be careful here on the side. I'm not saying, therefore, central banks are going to send it to $10,000 an ounce or anything crazy like that. Mm-hmm. What I'm saying is that there is a new buyer, a durable buyer. There's a bid under gold that just wasn't there before. And so in previous years, when we've seen things like, well, heck, as you and I are speaking, the White House is doing victory laps of peace breaking out. And that has set gold back, or it did yesterday. It's back up again today. If the worst that something like that, peace means you don't need a safe haven metal anymore. Like if it was the war that drove gold up, it wasn't. It went to 3,500 before the war escalated. But if it was peace breaking out, you would think that would be the end. It would be all down. But instead, it just fluctuates, and the next day it's back up again. Or if we had this conversation a year ago or 2 years ago, we'd be all, the question would be framed in terms of what is the Fed going to do, right?
Right.
Cut interest rates, what's that going to do to gold? And now we almost couldn't care less. We have these Fed meetings come and go, has no impact because there's this really deep pocketed buyer out there. And I think that's something that the average gold bug should look at and think about. Like the game has changed. Sometimes things are different. And on top of that, I think this I can't prove. Like the central bank thing, that's, even the other side admits that. But the other thing that I can't prove yet, I think is happening, Andy, is you've interviewed Rick Roll, and his thing about, for the past 50 years, the average allocation to gold in the portfolios globally has been around 2%. But in recent years, it's only been 0.5%. So a reversion to mean would quadruple the investment demand for gold, right? I don't know if that's ever going to happen. The world has changed. There's Bitcoin now in the world where there wasn't before. And, I don't think of Bitcoin and gold as interchangeable, but the average financial cat on Wall Street might. I don't know. What I'm saying is, I don't assume that the world has to go back to the way it was 50 years ago. But let's just say it goes back halfway there, right? In the scary world that we're in, that people start saying, you know what, a little bit of gold is a good idea to hedge my portfolio. Let's just say it goes to 1%. This isn't, crazy land, everybody, stacking gold to the rafters or anything. Just a 1% portfolio allocation to gold globally would double investment demand. And what I'm saying is, I think we see signs, not proof, soft data, if you will, of this happening. I see, like normal people in that I meet in my life starting to talk about gold and silver. I mean, it's actually getting mentioned. You see the talking heads on financial media. A couple of years ago, if they asked somebody what they were doing in their portfolio and they said, "Oh, we got a bit of gold in there as a hedge," they'd kind of laugh and say, "Haha," and then it became more of a drumbeat. "Oh, I've got gold in there," and they'd be, "Oh, really? Tell me about that." And now it's gotten to the point where the talking heads are saying, "What are you doing with your portfolio? Do you have any gold in it as a hedge?" Right? The conversation has really changed, which in Wall Street parlance indicates a crowded trade. And this is part of the buzz now, that gold is a crowded trade. And people view this as a bearish argument. Oh, it's the crowded trade. It's got to go down. Well, it's crowded on Wall Street where people pay attention to momentum. And how can you not notice something breaking out to an all-time high? Right. So, but that doesn't mean that the average retail person out there is long. And so this is part B of my answer. Sorry to be long-winded, but I'm wrapping up here. You know, I was there in the 1970s when you could ask your shoe shine boy and he'd talk about gold, right? Silver. I was the shoe shine boy, okay? I wasn't the experienced veteran at the time, but I remember that. And it's nothing like that yet today. Normal people are starting to even begin to notice it. But, you know, the bartender's not bragging about how many ounces of gold he owns in, you know, at the local pub, that sort of thing, which happened back in the 70s. So what I'm saying is, you know, these a market usually, you know, a cyclical market usually has a blow off top, you know, goes into a manic phase. And the CPI adjusted all time high for gold doesn't by itself qualify for that. So I'm bullish for multiple reasons, but mostly I'm just a fundamentalist. And all the reasons that drove gold at 3,500, they're all still there. And I think they're all pushing it higher, Andy.
Yeah, no, that's a really good answer. And actually, like you, because of the price, I don't want to say I'm uncomfortable, but I'm suspicious, but I'm less suspicious just because of the fundamentals lining up. Also, anecdotally, I have luncheons with a group of investors here in Atlanta several times a week and dinners and that sort of thing. And some gold companies will come and present to us. And it's really the luncheons and the dinners are getting fuller. And that could be a sign of a top, of course, but it could also be a sign of a really healthy bull market and people are starting to catch on. And I think it's the latter, if you would.
An interesting sideways anecdote here. I just did something with Jay Martin from the Vancouver Resource Investment Conference. He's called Commodities University, and he's got different experts doing different segments. It is for pay, got to say. But I did the segment on geology for non-geologists, you know, for investors. And we talked about it. And his reason for doing this is like he's got, you know, one of these big shows, one of the biggest ones in our space, and he's noticing a bunch of new people coming in, younger people, and you know, people who made money on crypto or whatever, and now they've got the bug. They want to invest and speculate on other things, and they're not Bitcoin maxis. They're agnostic. They're looking for any opportunity that looks reasonable. And so he's looking at these young people coming in, and they know nothing about the mining, and they know nothing about, you know, the promoters from Pender and Howe or on Bay Street. And he's thinking, you know, they're going to get they're going to get taken to the cleaners. Somebody's got to tell them what's what. Um, and the point of the story isn't to talk about Jay Martin so much, but that's evidence of this new interest.
Mhm.
And but it's just beginning. You know, it's when you hear people all around you talking about gold or silver at the Thanksgiving table, the way they talk about cryptos in recent years, that's when I'll start getting nervous about the, you know, the market being in the mania phase.
Yeah. Good answer. I want to go back 6 months ago and I want to give you a lot of props and a lot of kudos. And again, I mentioned this up to the camera. I don't know if this was, you were just lucky or good. And sometimes it's better to be lucky than good, I guess. That's the old
Yeah,
thing.
that's a famous Doug Casey saying, you know, but go ahead and finish the question. And
Yeah, well, I just want to make a statement is your investment class, for lack of a better way to put it, was copper, and copper hit all-time highs. So congratulations to you. And again, we get some right, and I say this with all humility, we get some right, we get some wrong, but you were right, and you've actually been right. This is the second time you've pulled an asset class out in the past 2 years with me that you were dead on about. So talk to me a little bit about copper. Are you still bullish on that, or what are your thoughts on copper?
yeah, I have to decline the honors in this case because copper going up to an all-time high, nominally at least, didn't go for the reasons that I said so, and it's already pulled back. So I really can't take props for that. And I will say that,
I'm going to give them to you anyways.
well, the year before I said, you know, gold was my top call. You know, that might not seem very exciting. Gold bug likes gold, but I'm not always, you know, gold isn't always my top call. So that worked out well in 24. The year before that was uranium. And
Yeah.
23 was the year that uranium went screaming up to $100 a pound. My reasons for being bullish on copper are primarily all paths forwards are inflationary. Great big beautiful bill working its way through Congress right now. You know, trillions and trillions of deficit spending. The money helicopters never left the air. Uh, you know, and it's a critical mineral. So it's not an AI bet or an EV bet. Those are tailwinds that just add to this whole thing. And unlike many other important metals, copper's facing a severe structural supply deficit constraint for decades, really going forward. The pipeline isn't there. So I also like uranium, and I know you're going to ask about that, but there's a lot of uranium out there. And okay, it takes time to build mines and so on, but that's a more solvable problem in my view. Whereas these giant copper mines that can be, they're very, very rare. They take a long time to get permit. They disappear entire mountains or mountain ranges. So, it's hard to get these things going. And even Trump's incentives, he could incentivize the heck out of copper, and that wouldn't produce one more pound tomorrow. Even the shovel-ready projects in the U.S. will take time to come. So I'm very bullish on it, but it is Dr. Copper, right? It is that PhD in economics, right? It's so economically sensitive that if you're looking at the world and the global economy is already sluggish, and the US economy still has yet to really see the impact of Trump's tariff war. And this isn't necessarily a criticism of Trump. I'm leaving the politics aside. Even if you agree with Trump completely on what he's trying to do, there's still going to be a cost to be paid. If you're going to retool the US economy, that cannot be a painless transition. And you would expect that pain to show up in Dr. Copper and his prognosis. So I completely did not see copper going to an all-time high earlier this year.